Welcome to another episode of Unblocking the Chain. I'm Drew Bradford, the CEO of Macropod and the chair of Jelly C, and I'm joined today by the CEO of Jelly C, Michael Prendiville. Welcome, Michael.
Drew, great to be here, mate. In the background, I've been getting a lot of your followers who are saying, "Where is he? He's gone missing." So it's great to have you back, mate. And good episode ahead.
Good to be in the driving seat today. I'm not allowed to do this very often, so it's nice to be here. Today we're joined by Kate Cooper, the CEO in Australia of OKX. Depending on which survey you look at, they're sort of number 2, 3, 4 exchange in the world. Binance being the big monster that everyone looks at. But OKX here in Australia got a big footprint here. So welcome, Kate.
Thanks, Drew. Glad to be here.
So let's rip in. There's a whole lot of stuff. I listened to a speech you gave the other day, so it'll be good to let's stand up and have a look at what OKX wants to do in Australia, what your views on the markets are. So maybe we step back a step and say, how did you get here? I know you and I used to work together at NAB, and we tried desperately to get NAB to come along this blockchain journey with us. And the fact that we're both in our respective seats now was that NAB didn't come along the journey with us. But how did you get here?
Oh, good question. I'm 25 years into my career, and the grey hairs show it. And I've always been on the forefront of like waves of tech-driven change. Like, I'm fascinated with the way technology has accelerated all aspects of life, but in particular aspects of work. So, for example, I was the first head of social media at number 10 in the UK when no one knew what social media was or what to do with it. And neither did I, frankly, but kind of worked my way through it. And more recently, I've spent the last 10 years in banking in Australia, leading innovation both at Westpac and also more recently at NAB, where you and I, Drew, worked together on the tokenisation strategy for the bank. Which included building a stable coin and an investment in a Standard Chartered founded company called Zodia Custody that specialises in custody of digital assets. So spent a year on secondment actually from NAB, running the APAC region for Zodia, and have spent the last just over 12 months as CEO of OKX here in Australia.
As I mentioned, I listened to this chat that speech you gave the other day, and there was some interesting themes in there. So one of the themes you talked about a bit was crypto's S-curve. Do you want to give us a bit of a view on where you see us on the S-curve?
Yeah, really, really good question. And it's actually my favourite thing to be thinking about at the moment in 2026, because I don't believe crypto is just in the acceleration phase of the S-curve. I think we're seeing different forms of technology reaching that acceleration phase at the same time, and each are compounding the acceleration of the other. So if you break down crypto and you think about digital assets more broadly and the underlying technology, blockchain technology, that's finally finding its place in terms of institutional adoption. You then think about stable coins and the extent to which stable coins have really had their moment and are really accelerating in terms of adoption overall. But then you think about technology like AI, which is obviously at peak hype cycle, but is rapidly moving up that S-curve and is integrating with blockchain technology because, of course, the governance and safety and security elements that blockchain technology provides in an AI-driven world. So you've got all of these major technology shifts all accelerating at record-breaking speeds, creating a flywheel effect for each other. And I think that means, for me, 2026 isn't just going to be about market volatility. We've seen, prices up and down recently. It's much more about the underlying infrastructure that is being built across the world, and a big question as to whether Australia will meet demand or fall behind.
Yeah, look, that's really interesting, because if you step back to previous cycles, the new kicker into this cycle coming is AI, agentic payments. We know that they essentially have to be done with some form of digital money, stablecoin, deposit tokens, whatever. So how do you see that acceleration or the agentic nature of AI coming into the space?
Yeah, well, I think we've seen that value and money is now programmable, obviously with stablecoins, but critically, trust has become programmable, and that's absolutely vital in an AI-driven world. And so we're seeing that convergence. I was at the first Australian transaction of agentic commerce a few weeks ago, executed by MasterCard, where they partnered with MainCode, which is the Aussie LLM that is behind Matilda, our sovereign AI capability. And I think from memory, a ticket was bought to an event cinema. I can't remember the movie that was bought for, but it was really fascinating to see the extent to which it was an agent acting on behalf, obviously with the right authentications, the right governance behind it. But I mean, for me, obviously I live in this world, so nothing massively surprised me, but even I was like, I could literally imagine my world changing when I have agents authorized to act on my behalf.
It'll be absolutely amazing. It's sort of with all this stuff going on. It doesn't feel like it though. The fear index is down at 5 or 8 or something. It feels like the industry doesn't feel as optimistic as it should be. One of the things you asked, are we in crypto? People ask you, are we in crypto winter? You've said we're asking the wrong question. So what is the right question? Where are we? Because I see so many positive things going on there, but it just doesn't feel good at the moment.
Yeah, it doesn't feel good, and we all know, and we've been around the block a good few years now, that markets are cyclical. But for me, as I say, this convergence of multiple technologies means that we're actually looking at a structural change. And this is why I love this sector, and this is why I entered it in the first place, is I always saw the potential of distributed ledger technology to completely re-architect the financial system globally. And for the first time, I'm starting to see that properly materialize beyond the death spiral of proof of concepts into real world use cases. And so for me, it's about that structural re-architecture that actually sits above market volatility and is a fundamental shift in how value is transferred, traded across the world. And so that for me is what's very, very exciting and has me optimistic, even though the fear index is perhaps at an all-time high.
Let's talk about where we are in Australia. And you've just been involved, or the DFCRC has just released a report. This is hot off the press on the economic impact of this industry on Australia and what the potential gains are. So, can you share your thoughts on that report? Because I know OKX sponsored that. So, thank you from the whole of all our listeners for sponsoring that, because I think it's a great piece of research. But can you give us your thoughts on what the opportunities are, but also how's Australia going at actually doing stuff to release that economic benefit? Because $24 billion is a big number.
Yeah, absolutely. So you've let the cat out of the bag. The productivity gain that the report quantifies is a $24 billion productivity gain per annum. That's 1% of Australia's GDP per annum could be unlocked through digital finance. And I think I remember I was on at the AFR Digital Assets Summit about 3 years ago, and Andrew Charlton was on stage and saying, we need the industry to quantify the impact. You can't just keep talking about the potential of this. We need to know the numbers. So I thought back then, as soon as I have the opportunity, I want to make sure that that happens. But I also knew that it wasn't the role necessarily of someone like OKX to produce insight into that, because obviously there'd be the inherent skepticism and bias. And that's when, combined with the Digital Economy Council of Australia, we approached approached the Digital Finance Cooperative Research Centre, who is an independent body, to basically conduct an independent piece of research based on the methodology that they've built over time in their dealings with the likes of the Reserve Bank of Australia. And so I've actually had very little to do with the methodology or the research and how it was undertaken. And I actually only saw a copy of the report myself last Friday. But I was amazed to see first the $24 billion number. But the thing that's more critical for me is that the DFCRC have been able to quantify where we're currently on track to achieve, which is only $1 billion of that productivity gain.
So less than 5%.
Correct.
So there's a big pile of money sitting on a table, $24 billion is sitting there, and we're on track to go and just take a little bit of piece and walk out of the room.
Exactly.
So what do we need to do to get 24 of 24 billion?
Yeah, it's an infrastructure play. For me, the DFCRC has kind of quantified 3 avenues to reaching that $24 billion number. First of all, through better markets, which is obviously improving the way that assets trade at scale, and that is estimated to be potential of around $10 billion a year. Secondly, through better payments, which is about streamlining how we pay for goods and services, especially across borders. That's obviously something close to your heart, Drew, and that's quantified to be about $8 billion a year. And then through better assets, about $6 billion a year can be unlocked by enhancing the fundamental functions of financial instruments.
So that $24 billion doesn't include, like Australians currently pay $7.2 billion a year in merchant service fees. So every time you tap your card, so digital finance can remove that too. So we don't have to go down a Visa rail, Apple Pay rail.
Yes.
But is that the $8 billion that they included in the report?
They have included elements of that in the report. It's a 185-page report.
Yeah.
It's ultra detailed, and they've broken
Talis
down.
told me 190.
Oh, he must have added an extra 5 pages
That's the appendix.
since Friday.
So do they include, for instance, FX margin? So the efficiencies from FX margin there?
Yes. All of that is included. And the difference between that 24 billion and the 1 billion that we're on track to realise by 2030, they've also looked to quantify that. That was the second half of the research period, where they realised that because of the methodology they developed, they could actually see the impact that certain moves from a policy perspective would make on Australia's ability to realise these gains. And so there's 3 recommendations that are included in the report, which again have been quantified in terms of their impact. The first is the establishment of a digital financial market infrastructure sandbox. And the idea behind this is it enables like transition of pilots to production. The estimated impact is about 1.4 billion by 2030. And the way I think about this is it's like creating a glide path from that death spiral of POCs that everyone has invested huge amounts of money into, to actually realising the commercial benefit and the commercial outcome at the other end. So that the idea is that sandbox creates like that glide path.
So is that being done by ASIC? Is that being regulated by ASIC, that sandbox, or
it doesn't exist yet. It's a recommendation in the report. So it's one of the things that comes out of the report, and obviously the hope is that by in a very detailed way quantifying all of this, there'll be moves by whoever the relevant regulator is to actually implement these recommendations.
Yeah, so think about it. The report for Project Acacia will be released in April. Ellis Connolly from the RBA recently, last week, went before the Parliamentary Economics Committee, and they talked about 2 of the things that would be perfect for tokenisation was fixed income, private equity.
Yep.
And so I imagine the right thing to do would be to go, okay, here's Project Acacia. There were 24 use cases, 5 proof of concepts, 19 actual projects where money changed hands, and just have a path.
Exactly.
This is what, we like this one. Here's credit. Here's fixed income. Here's unit. We did the Jelly C units. in there and just have a glide path to turning those from a project within Project Acacia into mainstream.
To mainstream production. And actually that's something else that's called out in the report. So the tokenisation of government bonds that formed part of Project Acacia, that's definitely called out as being one of the key opportunities in addition to CBDCs. And lastly, evolving a licensing framework for tokenised markets to complete like a fourth pillar of digital finance architecture. So those are the things that the DFCRC sees as being the big unlockers.
So are you talking about a segregated pillar for digital finance?
Yes.
Okay, which we don't have at the moment.
No.
Obviously, it's been, we have the amended Corporations Act, which is using the current infrastructure.
Yes.
So you're saying we need to have a segregated infrastructure for our industry.
That's what the DFCRC are recommending. Yeah.
Well, that's
that whole
that's good.
Remember when I was a boy, and you had the internet starting, and businesses, the ones that were successful in adopting e-commerce, wasn't called e-commerce back then, were the ones that separated their digital business from their traditional standalone businesses, and those that became successful, and those that didn't make a, hey, this is the new world decision, Kodak, were the ones that weren't successful. So maybe that is the right answer, that you get a separate thing. ASIC gets a whole separate digital. APRA are designed in verticals. They have a vertical that's the digital asset industry, as they have banks, superannuation, others. They have a whole vertical that's the digital assets industry.
Yeah, and I think with the challenge we have is that we're seeing other jurisdictions globally, the US is most notable with the Clarity Act, really seizing this opportunity. And Australia, I mean, anyway, we're fairly conservative. We tend to not be the first cab off the rank in many things, but we are one of the most sophisticated financial ecosystems in the world. We have huge trade internationally at an individual retail level. Many of our population were born outside of Australia. Something like 37% of people who live in Sydney were born outside of Australia. So you can start to get the sense of the
half.
I
think
it
be.
Is.
I think it's half.
Could be. So for me, that you can start to get a sense of the extent to which we need to have a sovereign digital finance capability that allows us to interoperate with those other markets. And if we're not doing it at pace, we will miss the 8 ball. And, I think actually, Drew, stablecoins, one of the areas where I feel most strongly about that, because the bias is to US dollar stablecoins. And, 97% of global flow is US dollar.
It's 99.
Is it 99? You would know better than me.
Well, look, there's $310 billion of stable coins. Non-US dollar stable coins are just over $1 billion.
Yeah.
Yeah. So EURC, so Circle's euro dollar stablecoin, in the last year has gone from next to nothing to just below 500 mil. So they realise that there is something to be done there, and you can sort of see that's the first little sign that something's happening, and then of course when MacroPod and everything else.
Well,
sort of
it's
starts to come
vital for
through.
Australia's sovereign digital infrastructure. Otherwise, we are basically attaching ourselves to the US dollar. And so for me, and this isn't covered, by the way, by the report for the DFCRC. This is more Kate Cooper's opinion. But for me, it's absolutely pivotal that there is sovereign infrastructure that is Australian originated and protects Australians' sovereign financial system, such that we continue to be a key player globally. And so that's not quantified in these numbers, but you can see a future state, and I think it's going to happen quicker than we anticipate with the acceleration caused by AI and agentic commerce, to make sure we have a seat at the table.
Well, that's your Mark Carney quote. If you don't have a seat at the table, you're on the menu.
You're on the menu. I love, if you haven't seen his speech at the World Economic Forum. It's well worth 20 minutes of your time. He also delivers it in French if you're a French speaker. But for me, that quote is like the quote of 2026. Yeah, if you're not at the table, you're on the menu. And in that speech, he was talking to middle powers like Canada, like Australia, and saying if we don't come together, and if we don't make sure we're at the table, then we will be eaten by the superpowers, the US dollar domination, etc., etc.
Oh, digital yuan, right?
Yeah, exactly. And Trump, for all his challenges and whether you support him or not, he does understand the supremacy that is possible by the US owning the digital finance infrastructure.
I have no doubt that's why there was a lot of motivation to get the Genius Act through, and it solves a lot of his problem. But I think the flow-on effect is there. So my underlying view is stablecoin turnover will look like foreign exchange turnover at some time in the future. So the Aussie dollar is between 6 and 7% of daily foreign exchange. So if there's $300 billion of stablecoins, then 6% of those should be Aussie. But I don't think it'll be $300 billion of stablecoins. We will end up with trillions and trillions in the not too distant future, and AI is going to accelerate that. The smaller countries are the ones that are going to really miss out. Like Malaysia has now done a whole lot of stuff on stablecoins because their economy was starting to be dollarized, where people are just buying and selling everything, USDC, USDT, because the capital controls around the ringgit was so tight that people just found it easier. We'll just trade in dollars. Cambodia is a dollarized economy now. So if you don't adopt the new technology, you are on the menu.
Yeah.
So what can Australia do from a from the government's perspective to actually move this forward? What are some of the initiatives, Kate? We were down in Canberra and we were talking. We had a round table on the Strategic Digital Asset Reserve.
Oh, why don't you two run through that? That would be good.
Just briefly. I mean, we're talking about what can be done to actually help facilitate, progress in Australia. Otherwise, we won't be a fast follower.
Yeah.
We'll be left behind, and we're we're on the plate.
Yeah.
What are your thoughts on, for instance, that Strategic Digital Asset Reserve? Can that be something which signals to the rest of the world that we are here?
Yeah, well, I think what was really interesting is, first of all, it was an excellently facilitated roundtable by you, Critter, but it wasn't just a talking shop. So we were in Canberra, and we had the experts around the table, and we were aligning on clear decisions about the direction of travel. And we debated, is this about a sovereign wealth capability? And actually the conclusion of the room was, no, the first port of call is this is a defence capability. This is about us actually defending Australian sovereign digital wealth, and making sure that we protect that. And I think that for me it was a bit of an aha moment when the room reached that consensus, because it stopped it being a debate about, where do the assets sit, which state do they sit in, who benefits from the return on those assets. And it started to be much more at a macro geopolitical level, an imperative that we just have to make happen. And so for me, that starting posture of defensive versus opportunistic is really important. It's where the importance of AED stablecoin came in. We had 3 of the AED stablecoin issuers in the room, and they'd all been having conversations with Australian banks who were prioritising USD stablecoins in the pilots that they're deploying, which is disappointing. I understand it. I've been in banking. I understand the risk-based decisions that are taken. But I also understand that sometimes it's the easy answer. And actually, you need to take a step back and think about what's best, not just for me, but for Australia at large. And then I think, obviously, we're going to be going on to thinking about what the opportunity could be. But first, at a baseline level, being able to hold that strategic reserve is vital.
Yeah, so one of the comments that was made was by the other co-chair, Joni Perovic, who thought that the stablecoin should actually be stage 0.
Yes.
So
Yes.
the critical relevance of the stablecoins, Australia has to address, the fact that the stablecoins are not large enough, not liquid enough at the moment, and, pushing forward on that side. So there is that liquidity, there is that market. So everything else can start from there.
Yeah.
It really doesn't matter whether we hold Bitcoin at this stage. It can come downstream. So that would be stage 1, of the confiscated crypto. But stage 0 to help facilitate all the projects, tokenisation, payments, etc. It all has to come from, the liquid stablecoins. So I found that really interesting, and that didn't even come from the people who were the stablecoin issuers. It came from the lawyers, and it was unanimous in the room.
Yes.
That the stablecoins were a critical part of our infrastructure.
Yeah,
So-
absolutely.
There's no point in having tokenised assets if you don't have tokenised money to transact them.
Exactly. And the other thing that came through very strongly in the room was the importance of custody and just overall governance. And that really is the product. And what creating a reserve does, in addition to that defensive play, is it actually helps to strengthen the infrastructure that Australia operates on from a digital finance perspective. And so the creation of this is a signal from the Reserve Bank of Australia, Australian government, that we are investing in the infrastructure that will have us be toe-to-toe with other players in the market and not miss out. So I think it has a strategic role to play in addition to the specific role for the Reserve.
Yeah, and there's also a very strong signal sent that the business should go to the exchanges that have a strong presence in Australia.
Yes.
So, it's good.
That's a great segue into, Kate, here's your opportunity to plug OKX. So you talk about OKX as being an infrastructure node.
Yes.
So run us through what you mean by an infrastructure node, and how do you see the exchanges evolving? And I'll also flag here, there's a lot of them.
Yes.
How do you see consolidation playing out? So what's OKX going to do to be one of the last businesses still standing as opposed to being part of the consolidation?
Yeah, look, listen, I see the market in kind of two halves. There's largely the Australian-founded crypto exchanges, many of which are fantastic, who do a really good job of serving the everyday retail customer. Their platforms are simple to use, and certainly they've been in market for a long time. But I think that one of the things that we've identified is that the sophisticated end of the market needs something more. And that's where the investment from a global player, and a global player who is investing in product development across jurisdictions around the world, really comes to the fore. So OKX, we see our job really primarily to be more working with the advanced trader group, to be working with high net worth individuals, family offices, institutions, right up to the superannuation funds. And for that, we've invested heavily in critical elements like holding an AFSL onshore, custody of assets, proof of reserves of assets. So we hold all assets one-to-one on the platform, and for the top 22 tokens, you can see that live in real time. So there's no rehypothecation, which I think is incredibly important. And so that's really where we've positioned ourselves. And to support that, this week we're launching a VIP program, which will see our largest clients who hold, the most significant number of assets on the platform really benefit from increased benefits, Qantas style, yes, lifestyle benefits, but also money can't buy experiences like coming to us with the Formula One, which will be really fun. And so I think
the winning team.
We'll see. Lando won last year when I was there, and that was a real highlight. But I would love to see Oscar come home in his home race.
Yes.
We shall see. But so, that's been really important to us. And then the other thing that is coming down the pipeline for us is thinking about how do we support everyday transactions, which comes down to, kind of listing of Australian dollar stable coins.
Any day now.
Any day now. any day now. And that really is the way we see ourselves from an infrastructure node perspective, is providing the plumbing on a safe, secure base that has a risk and compliance team onshore. Like I have 30 people sat in the office in Sydney today. We have personal relationship managers for everyone, Australian relationship managers. We're not sending you offshore. So that, I think, really matters and is important. I think at that round table, someone made the point, you want to be able to pick up a phone to someone when you've got a problem. And so that's been fundamental for us. A lot of clients or people considering us reach out to me on LinkedIn, and it's always my greatest part of the day when I get to speak to our user base.
I'm looking forward to having my salary paid into OKX and then using my debit card.
In AUDM.
Yeah, in AUDM. And then using my debit card in AUDM, going down, buying my coffees, coming straight out.
Yep.
I mean, Bob's your uncle. We don't need anything else after
We're not very far away from that being
Exactly.
An infrastructure-led possibility for Australians.
Yeah. I mean, it gets interesting at that point.
Yeah.
So where's success for OKX in 3 to 5 years?
I think for us, we clean slate, completely still setting the benchmark for safe, secure activity in the digital finance space. We obviously see ourselves as one of probably 3 onshore operators who are providing that infrastructure, as I say, largely for the larger end of town. And I would like to see that safe, secure, transparent infrastructure embedded into the lives of everyday Australians and everyday Australian businesses, and there being seamless opportunity to the global financial market as a result in real time.
Nice.
I like it. What about yourself, Kate? Where do you see yourself? What's success look like for Kate Cooper in 2 years' time?
So I've just written a book, and it's called Edge, and it's all about how you navigate tech-driven change. And for me, that's the interesting part, seeing the conversion of the different technologies. I've always been on the forefront of technology change, and so I'm really interested in how does AI come to combine with digital finance, and what new opportunity pools can we create from that.
It's been awesome, Kate. It's been awesome having you on the show. This has been terrific. There was a few follow-ups from the Canberra last week, and obviously next week we're in a policy week, so the release of the report, Economic Impact Report, is very, very timely, and I hope our listeners got a little bit out of that. You can access that on the DFCRC's website. They've got a direct link to that. $24 billion of savings, and I think Tallis has actually left out a few, so I think we can get more if we embrace this space fully. Thanks again, Kate.
Thanks, Drew. Thanks, Critter.
Yeah, thanks, Kate. Thanks, Drew.